Commissioner Dave Cahill.
Here.
All right, great. Thank you so much. Pursuant to California Government Code Section 54953, all votes during this teleconference meeting shall be taken by roll call. And we'll begin with public appearances. Do we have any members of the public present who wish to address the commission regarding matters not on the agenda? Seeing none, Jen, did we have any public comments that were provided for the meeting?
No written comments were submitted for this meeting.
Okay, thank you. Nothing on the consent calendar, so I'm going to move us into discussion items. But before we do that, we have a lot on the agenda today, and I wanted to offer a suggestion, which I hope will be helpful. I think many of you are probably familiar with the word spelunking. It has to do with exploring caves. The specific study or exploration of caves is speleology. And I had an English teacher in college who made a big impression on me when she urged us to avoid what she called the speleological theory of literature. The idea that in order to really understand what was going on, you had to pick out some obscure reference in the text and then elaborate on it in great detail. Her view was that in a great work of literature, the things that are most important, in fact, are the things that seem most important. And I'm going to suggest that we take the same approach today. We have a lot of reports to look at. We have the audited reports as well. And rather than losing ourselves in the trivia, I'm going to ask that we try to stay focused on what's most important. So with that in mind, let's begin with the financial reports for December. Myrna, this is you and Randy. Are you going to take us through the reports today? Okay, I'm going to ask Jen if maybe we can enlarge that a little bit.
So I have prepared an slides, a PowerPoint to provide overview of these reports. So
fabulous.
We could go into detailed questions after I finish my presentation, if that's okay.
Perfect. Please proceed.
Okay. Jen is going to share the slide.
And thank you for doing that, Myrna.
You're welcome. Okay, so I've been looking forward to this point. You're 6 months into the fiscal year, and I've prepared a mid-year financial report for fiscal year 2021-22 as of December 31st, 2021. Next slide. The Reimagining Plan was completed last year and approved by the Commission. The strategic plan sets priorities for the budget, and as such, the Sonoma County Library's budget aligns with its vision and the goals within the Reimagining Plan. And there are 3 concepts that give the library purpose and a pathway to building a stronger community, providing opportunities for all to learn, contribute, interact, and participate, supports resiliency, and fosters racial equity, social justice, and inclusion for everyone. Having said that, next slide. A mid-year review has 3 components. And they include to give you a status and a checkpoint for where the Sonoma County Library is marking the mid-year of this fiscal year. It includes year-end projections to June 30th, 2022, on how the Sonoma County Library will end according to revenue and expenditures. Also, it's a financial health check. Are we on track with revenues and expenditures, cash balance and fund balance? And third, looking ahead, how do we stay on track and to support this the financial position into the next fiscal year and continue to advance the Reimagining Plan? So the library has a healthy and strong financial position, and it is possible because of four main components. One is that it continues to experience resilient revenue receipts. It has a strong cash and fund balances. The governing board continues to implement financial discipline. You have controls in place and policies in place to guide your decisions. And you have a fully funded stabilization fund, all very important components that builds a strong financial position. I would like to say, it's okay. Well, I would like to say that the commission and the finance committee in particular has reviewed monthly financial reports. And as you know, the reports have been pretty consistent across the board in terms of revenues and expenditures. The staff has come to the commission with any needed budget adjustments or any anomalies that have been discovered. And in particular, you have experienced this over the last year. The reports for the remaining months, I am confident will remain consistent as long as there are no unusual activities or outside external things that affect our economy and the library. The things that we can expect, which are very routine, are under sales tax, are the holiday sales receipts that have not hit our books yet, and the April property tax receipts. So those are routine, and we will see them in the coming months. Again, the library's financial position is strong moving into the last 6 months of this fiscal year. The next slide. So revenues remain steady. This slide shows you that over the last 5 years, the revenue has had a steady annual increase, modest increases, but over the last year, since Measure Y, the first full year of Measure Y collections, revenues have increased by $6 million. And barring any external factors that can affect the revenues, like local, state, and national economic conditions, any wildfires or floods or other natural disasters and a pandemic that we have all experienced and can create some uncertainty for the library. Barring any of that, I feel confident that we will meet our targets. And that's our next slide. So this is a projection to year end, June 30th, 2022. What we have here is your adopted budget. When you first adopted the budget in June of last year, since then, the commission has approved a budget adjustment to rebudget capital expenditures. So you'll see that capital expenditures increased and the use of our fund balance increased with that. When you adopted the budget in June, you approved one-time funding for capital projects as well as 3 new positions. And then you rebudgeted funding to continue the capital projects into this year. In terms of revenue expectations to the year end, property tax is projected to be on target and remain flat to the end of the year. Ann and I met with the County Auditor Controller's Office, and they are confident that the projections are spot on for remaining flat. The sales tax, you can see that they come in on a monthly basis, and they have been strong, inching up every month, and that's prior to the holiday receipts. So given that we will see the holiday receipts in February, and generally they come in, they spike up a little bit, there could be a very slight increase over what the commission approved in sales tax revenue. But generally flat. On the expenditure side, there is a slight, we will be within budget, slightly under budget. Benefits are normally budgeted at the high end to ensure that benefits are fully covered. Given the monthly reports, I project that there'll be a tiny bit of savings there. But we're on track with our salaries and benefits. In supplies, we've spent 97% of our, I project that we will be at 97% of our supplies budget. Some things, the pandemic still is affecting us in terms of travel and other things that cause us the slight savings. In capital, in speaking with the division director there, there is one project that will start in April, and we will need to roll over approximately $2 million worth of projects into next year, given that the project will start in April of 2022. So these are the projections. I'm going to stop here if anyone has any questions. Okay, next slide. On the financial health check, our cash balance is healthy, and this chart illustrates the nature of our revenues. Every organization has a revenue cycle, and in our case, this gray line is our restricted cash from bequests and donations. Is pretty flat. The sales tax comes in on a monthly basis, and like I mentioned earlier, it's slightly has increased every month. And property tax is the one that is you see the ebbs and flows here. So it starts flush because in April the library received the property tax payments from April, and you end up using that cash balances, and we see it at a low in November, just before we get our December receipts, and which were about $13 million this December. Our total cash for property tax and sales tax alone is $34.8 million. The next slide. Our fund balance is also healthy, And as you know, we separated for property tax and sales tax. They show the same pattern here. What is illustrated in this slide is fiscal year 17-18, which was the first full year of Measure Y. And since then, the fund balance peaked here in 2021. And the reason is that our expenditures decreased as a result of the pandemic, right? We cut back hours, and we reduced our expenditures. So the unspent funds reverted into the cash, the fund balance. And that's why we see a peak here. However, in the next fiscal year, 21-22, the commission has approved use of the fund balance, as I mentioned earlier, to pay for one-time capital projects and 3 new positions, as well as the re-budget that was approved in October. So we've used the fund balance for those reasons. And so that's why you see a dip here. Next slide. And if you wanted, this table gives you the nominal numbers for the fund balance. The fund balance is available for budgeting. These are also in all those detailed schedules that you receive every month. Okay, next slide. So to recap, our Sonoma County Library has a healthy, strong financial position. Our projections are on track to end the year within budget as of June 30th, 2022. And we're on track with our fiscal health. We have adequate cash available, and our fund balance also represents that. So we're in good standing. Next slide. So looking ahead, the Sonoma again has a strong financial position. It has completed its audited financial statements, which you will review in the next agenda item. You have an upcoming master facilities plan, and the priorities for me as the new chief financial officer are to implement a capital asset maintenance fund and update the capital improvement fund, review internal controls, update policies and procedures, which include purchasing, cash, travel policies, among others, and continue ongoing training for our finance team. So having said all that and poured through our monthly reports, the library has a strong foundation for developing next year's budget to support the Reimagining Plan and the Commission's vision for the library. That concludes my presentation.
Thank you very much, Myrna. I appreciate you laying this out in big picture format. Does any member of the committee have questions on what Myrna just shared with us?
I think it would be helpful for the rest of the commission, so.
Yeah, so if you can, are you still, I know this is a next, it's in a discussion for the next item, Myrna, but we're still planning to present the mid-year budget adjustments at the next commission meeting. Is that right?
Yes, if you're okay with accepting this report, it will be presented to the full commission on February 7th.
I think that would also be helpful. Any concerns or objections from the committee? Okay, in that case, what I'd like to do, again, keeping our focus on the high level, is just in looking over the detailed financial reports, I had a small number of questions personally. I'd like to give other members of the committee a chance to ask their questions as well, if that's okay, Myrna.
Yes.
The first item, and I'm going to stay on the summary page that we're on. I just wanted to share with the committee something that you had told me. In looking at the property tax, we're at mid-year, but you can see that the receipts are above what we would expect at 50%. They're actually at 58%. Myrna had shared with me that based on the discussion that she and Ann had with the county auditor's office, that for whatever reason, a larger than usual number of homeowners or property owners prepaid their full year of taxes in December rather than splitting it 50-50 between December and April. And that was why, although this number is significantly higher than we would expect, we're not projecting a vast variance at year end with the budgeted amount. Did I express that correctly, Myrna?
Yes, yes.
Okay. The other thing I'd like to point out is in the footnote about the total number of pay periods. We're at mid-year. We would expect to be at 13 pay periods, and that's in fact what we're showing. Now, year to date, salaries and benefits are only at 37% of what we've budgeted, but the library has recently gone to extended hours, and so I'm expecting that we're going to see that percentage gap start to decline as we're paying people for more time spent. Is that a reasonable projection?
Well, as you can see, right at that line where the pay periods are listed to 13.
Yeah.
49.6% is the salary. So the salaries are spot on for mid-year. However, the benefits, that line item that says 37.1%, the benefits and salaries combined. And as I mentioned earlier, we will be when the budget was created, it estimated the higher end of benefits. So we will be coming in with a little bit of savings on the benefit side.
Okay, great. Thank you. Now, I did have a question about the other contract services, but I'm going to hold that until we get to the detail page. Did anybody else have any questions or comments on the summary document? Okay, hearing none. The cash balance summary, which was the next page, you already reviewed that in the overview presentation. I didn't have questions to this document. Did anybody else? Okay, then the statement of special fund activity. I did not have a question on the property tax page. I did on the sales tax, but before we get there, did anyone have anything on the property tax page? Okay, Jen, could you please move us down to the bottom of the special fund activity for sales tax? Yeah, so Myrna, I'm not sure how this happened, but you see the line toward the bottom that says fund balance committed to rate stabilization. It's right above the grade line that says undesignated, unreserved ending fund balance.
Yes.
In the in the report that we had last month, the November financials, there was a $3.069 million item there because we had gone through the process of committing the funds for state for rate stabilization, and I don't see it here. I'm not sure what happened to it.
I see what you're saying. I am not sure what happened. I'm not sure what happened in this. I'll have to report back to you all.
Okay, if you would take a look at that. I'm not sure how it happened. I'm sure the money's in there somewhere, but it should be. This was part of the whole discussion we had about making sure that we've allocated 15% of both the property tax expenses and the sales tax expenses. So I didn't see an error in the total fund balance, only in how it was allocated.
Sure, I will follow up with that.
Okay,
You know, somehow it's just not reflected here.
yeah,
We do have a fully funded stabilization fund, and it is in both the property and sales tax. It should be, so we'll make that correction.
okay, thank you. Any other questions on this page? Okay, the next page was the voucher payments over $50,000. Not surprised to see group 4 here. What did surprise me, and this may be my misunderstanding, but in previous months, we had for each month shown about $50,000+ of retiree health insurance to the P&A group, and I didn't see anything for December.
Yeah.
Is that something that we do pay every month throughout the year?
Yes, we do pay that every month. I know that there were some additional payments at the end of the year. Maybe at the time that this was done, that payment had not been captured.
Okay, so I would just ask that you look into that and see, because I'm thinking we should have seen that. Anything else on this page for anyone? Okay, on the next page was the other contract services, but if it's okay, rather than looking at this page, I'd rather look at the next one where we see a summary of the amounts paid, which does equal the amount that shows on the mid-year summary. Now, I noticed here that about 2/3 of the way down, there is an item for the P&A group that says HRA contributions, and it has an asterisk which says coding error. And I know you and I had talked, and you said that you had and the team had not yet had a chance to reclassify those items that needed to be coded correctly.
Right, so I think now this goes back to your last comment. I've been working with staff, and yes, this HRA contributions are not supposed to be in other contracts. Those 2 items that you see here, so that correction, these 2 items that you see here are I think the first 2 months, and they need to be corrected.
I don't have a problem with that. Here's my question. I didn't see that asterisk next to any other item. But as I looked at, for example, I'll start at the top, 4 items down, EBSCO subscription services, annual subscriptions. Should that be under collections rather than contract services? What does that refer to?
That is actually a contract. It's a part of we're part of a consortium, and we get a collection of our online services through EBSCO.
Oh, okay. So in your view, Anne, that is correctly coded here.
Yeah, that's the way we've been doing it. Yeah.
Okay. All right. I did not have any other questions on the.
Okay, Andy, I do believe that you will see some significant changes on here, for the future months.
Okay.
We'll be looking at these, and we'll be making corrections to them.
Okay.
It's across the board. It's not just this one account. It's across the board where we need to ensure that coding is consistent and charges, expenditures are coded to the most appropriate account.
That's fine. This was the one item on the summary that seemed most significantly out of line with projection. And I know you indicated that there was going to be some recoding. So just let us know when that is accomplished, okay? And we'll look for that in a future month. those were the only questions I had on the financial reports. Did anybody have questions on the detailed property tax or sales tax summaries? The budget to actual? Hearing none. Okay. Myrna, thank you. And Randy, thanks to you and your team as well for your help with this. I appreciate it. And I especially appreciate the overview report that you did, Myrna. That was very helpful. Okay, we're going to go on to the next item, and it's a series of updates. Myrna, I'll start with you. The update on the mid-year budget review. Please tell us where we are and what's coming up, please.
Well, in the mid-year budget review, there for the February commission, you will see a couple of HR items where FTE, it's a question of FTE. So that is a preview to a couple of mid-year review adjustments. But other than that, I'm not expecting any additional adjustments at this time.
So is it your plan that at the February commission meeting on February 7th, you'll be sharing those items with us and asking the commission for approval to make those mid-year adjustments? Yes,
that's correct.
Okay, that's great. The next item I'll report on, and that's the financial workshop. And apologies to everybody. I know you heard me talk about this probably more times than you wanted to. But we've made a change in direction, and it was with everything else that's going on, it was becoming somewhat difficult to find an appropriate meeting time to cover what I thought we would include in the financial workshop. And it turned out that we were actually going to be able to cover the most important items in other settings. So you'll recall that there were four items. We wanted to review the audited financial reports, and I'm really happy that Kellin Gilbert from Pisenti and Brinker is here today. He will be sharing those with us, and then we'll have a chance to discuss them with the full commission again at the February 7th meeting. That's great. Second topic was the mid-year budget adjustments. You've already heard from Myrna that she will be sharing those with the full commission on February 7th. And then the third topic was long-term pension liabilities. If it's not too confusing, I'm going to just ask Myrna if you would maybe comment quickly on the next item, the pension analysis by Bartel Associates. You had shared with me some more recent dates on that. Would you share that with the committee now, please?
Yes, it was. We were expecting the CalPERS analysis for out years of funding requirements for the library at the end of this month. In my discussions with Bartel Associates last week, they requested additional time to November 11th to complete that analysis. So that report looks at the demographics of the workforce. It will project out what the annual contributions are for 30 years. And it will do an analysis to inform the commission if it desires to make additional payments to CalPERS. So those are the components of the CalPERS study that Bartel is working on now.
Okay, thank you. And I think you misspoke and meant February 11th rather than November 11th.
Oh, did I say November?
Yeah.
That's my birthday.
Oh, happy birthday. Yeah. So,
I don't know what happened. That was a Freudian slip.
Yeah, it's okay. So given the fact that they've requested till February 11th, this committee will have a chance to review the report at our next committee meeting. And then we'll have a chance to discuss with the full commission in March. So that's the third item. The fourth item that I had wanted to cover in the financial workshop was the commission's role in financial oversight. And I think rather than covering that as a separate topic, it's something that we will be taking up in connection with each of these three other areas. So the good news is I feel confident that we can cover these items in a timely way and not require a separate 3 to 4 hour meeting. So glad we're able to do that. The next item update was the budget workshop preparation. What's the situation with, oh, I'm sorry, Barbara, I see you have a hand up.
Yes, thank you, Andy. You mentioned everything except OPEB when you were talking about the Bartel analysis. That's of CalPERS and OPEB. Both of our long-term liabilities are going to be topics of our financial workshop.
Yeah. Let's come back to that because I do have a question. Myrna, the report we're getting from Bartel is specific to pension, is that not right?
That is correct. That is
Okay. But the OPEB liability is covered in the audited financial reports that we're going to review today. So I'd like to review those with Kellin, Barbara, and then let's come back and circle back on this at the end of the day, okay?
Yeah. So when Bartel Associates presents, they can also cover OPEB at that time for the Finance Committee and the Commission.
Oh, they can?
Yes.
Barbara's shaking her head. Go ahead, Barbara.
I just don't understand. Did we contract with them to do both a pension update on CalPERS and an OPEB update? And if we did, it makes sense that we would hear, two reports, but if they're doing a pension update for us report and that's all, then they wouldn't have the OPEB in there. I just confused
It's
about.
not one report, it's two separate reports, but
Okay.
they present on those two separate reports.
Okay, well, they think that's what we were asking. So there are two separate
Yes, the
ones.
OPEB report and the CalPERS. They have completed the OPEB report, but they requested to hold one meeting to cover both topics.
Okay, so
Because they
just
want to make sure that really the CalPERS study is the one that is more informative on policy discussions for the commission.
well, we also have an OPEB policy that I think we want to take a look at. But I was just trying to make the point, following up with what you said, Andy, is that we're going to be able to address these other things in other ways. And because OPEB wasn't mentioned, that was my concern. So I still think that we need some, we need to just make sure that everyone on the commission really understands these long-term liabilities. They're kind of complicated. There's a lot to it. And I'm not sure, just one item, or even doubling up as we're talking about now as a commission topic is really the best way to educate all the commission. So just as some of my thoughts.
Well, and I appreciate that. Let's do this, Barbara. Let's see what we get on the 11th. And then we can strategize further about how to best ensure that the full commission is brought up to speed, okay? Myrna, the next item, the budget workshop preparation. Tell us what you and the library management team are currently doing in that regard.
Sure. So the workshop is scheduled for Friday, April 1st, scheduled for most of the day. And we're preparing an overview of accomplishments and really looking into next year with the Reimagining Plan to guide us in preparation for the budget. Also on this agenda for you today is your consideration of the allocation of the two major revenue sources that would affect how we prepare our budget for next year and how we present it to you all. So we will also be emphasizing our accomplishments with Measure Y for the workshop.
Any questions from the committee about the upcoming budget workshop on April 1? Expect we will have some as we get closer. Okay, and finally, I know we had talked about establishing fund balances that were committed to both capital improvement and capital maintenance. What's the estimated timeline for that, Myrna?
I hope that we can include it as part of the presentation on April 1. I'm taking a practical approach to these two new fund balances that will appear on our statements next year. And really it is to be strategic and plan and incorporate additional planning when it comes to our capital improvement, in particular that because we're going to be receiving our facilities master plan that can help us prioritize our capital improvement projects and fund them going forward. And also in terms of the maintenance, I hope that we can meet many of our strategic goals in our reimagining plan by funding in the out years any replacement of vehicles and computers and servers that it is a good practice to have a fund available for those items.
I agree, and let me just say I realize that there are going to be all of our division heads involved in this process. It's not something that you control individually, but I would really like to encourage you and Ann and Erica and the whole OMT to take that kind of strategic approach to the budget plan. I'd really like to see how the budget aligns with the reimagining plan, with the facilities master plan, with the premise that we should be putting our money where our priorities are. So Ann, I see you nodding. Thank you in advance for doing that. And I look forward to seeing what comes out. Any questions on any of those updates? Okay, thank you. Well, I'm going to go to item 4.3, and Randy, I'd like to thank you because I know that you've been the interface between the library and Pisenti and Brinker. And Kellin, I'd like to welcome you to the Finance Committee. It's good to see you again, and very glad that you and your team were able to complete the audited financial reports. I'm going to turn the session over to you. I don't know, did you have a presentation that you wanted to make initially before you took questions from the committee?
So I do have a very brief presentation. I feel bad if it's redundant because it will be similar to the presentation that I would give to the full commission. So I tried to mix it up a little bit. I could go through those slides if you would like, or we could just dive right into the financial statements. I'll back up and just say with last year and the timing of last year's financial statements, we didn't give the Finance Committee a chance to review them, which I think is a real disservice to both you, the committee, and also us, the auditors. So the main goal for me for this meeting was to give you a chance to ask questions, poke holes, any grammatical insights that you found or anything else that you wanted to ask, just so that we don't have to go into that level of minutia with the full commission out of respect for their time. So for me, I'm mostly interested in your questions and comments, and I'm happy to talk about the status of the audit. But if you would prefer, I could go through a few slides first, if that's what you'd like.
Yeah, I'm gonna use the prerogative of the chair and ask you to do that. And I guess my request would be, please, and again, going back to my opening comments to the committee today, please help us focus on what you see as most important in these audited reports and what you feel we should be paying the most attention to.
Okay. All right, here we go. I believe everybody can see my screen at this point.
Yeah.
Okay. Again, I'm going to go through these a little bit quicker just because they will be a little redundant to the commission presentation. A little bit of background on the team, myself and Brett, who you've met before, obviously. Alyssa Foster is a senior associate with about 4 years of experience. She was the senior on the engagement, and Gina Roach was the audit associate. And as you know, feels a little like deja vu because I did just present to you guys back in September. So I do apologize if this is all still fresh in your mind, but I really do appreciate this slide. Just reminding everybody that all the numbers within the financial statements themselves, and the internal controls that govern the financial statements, those are the responsibilities of management. So we, the auditors, are responsible for providing an opinion, and we do that by evaluating the risk associated with the financial statements and the financial statement line items. And to break that down even further, we consider inherent risk and control risk when we determine the level and scope of our testing procedures. So that, again, is the responsibility of the auditor to give our opinion after we've conducted our audit in accordance with the relevant standards. And Mirna stole some of my highlights a little bit earlier, or I guess they were a different time period, but this does kind of recap the health of the organization, of the library. So your total assets and deferred outflows exceeded the liabilities and deferred inflows by about 14 million at June 30, 2020, and about 23.5 million at June 30, 2021. And I know that you guys are in the thick of this every month, but I do think a little slide like this is helpful to kind of give an idea of really where the library has gone and where the library is at now relative to the past. So the Measure Y fund, which is obviously one of the biggest, most important funds for the library, it's increased by 7 million from the last financial statements that I presented from 2019. And total net position, and again, this one I think was really the most staggering, is that your total net position from June 30, 2018 to June 30, 2021 has increased by about 22 million. So overall, it's not hyperbole to say that the library's overall financial health is healthier than it has been at any point since I've been associated with the audit. And then this is just a recap of where we spend our time during the audit. So cash and investments is a very important part of the audit, but it's also relatively simple to audit, so it doesn't have that high of a percentage. Revenue recognition and the validity of accounts receivable, that's always a key focus of any audit. The financial statements presentation to disclosure, given that we had 2 years, this was definitely an area that we spent a lot of time just making sure that all the disclosures were accurate and all the information that's required to be presented was presented. And then the last two big chunks here are the pension and OPEB. Those are really, as you kind of mentioned just a minute ago, those are really complicated actuarial presented numbers, and the disclosures are very complicated as well. So that's a place where we spend a lot of our focus. And then the Measure Y compliance, which I actually have a few more slides on, is another key area for our audit. So the Measure Y compliance, just to remind everybody, what we're looking at when we are testing compliance. We use the language, and this was discussed with Ken Neiman back when Measure Y went into effect. that he concluded, and we agreed that using the actual language of the Measure Y ballot was the best way to determine what is and is not allowable for the Measure Y fund. And then just another reminder is that we don't evaluate the effectiveness or the accomplishments of the Measure Y fund. We really are just looking to see whether expenditures made under the Measure Y fund are in compliance with the ballot measure. So again, we're looking for the main assertion that we're looking for is the allowability. We want to make sure that these expenditures fall within the purview of Measure Y. We look at classification to make sure that they're recorded with the correct name and type. And we look for cutoff, making sure that these expenditures are in the right period. So the below is a list of different costs that we believe to be allowable according to the ballot measure. So maintaining existing libraries, improving services at existing libraries, upgrading facilities, and supporting library programs. And during our extensive compliance testing, we did not identify any transactions that we deemed to be non-compliant. And again, I know I'm moving fairly swiftly. I apologize for that, but I do want to make sure that we have time to really dig into the financial statements for this meeting without dragging your overall meeting time too long. We are approximately 95% complete with the audit. We are at the very, very tail end and anticipating issuing hopefully this week. And we anticipate issuing an unqualified opinion, meaning that the financial statements are free of material misstatement. And then because the commission is technically the body that's responsible, I did remove the some of those required communications that you're probably familiar with, but I did think it was important that we communicate. We did not encounter any fraud, illegal acts, or significant or challenging transactions of which we weren't sure how to account for, or anything that we felt that management might have been able to been biased towards. We didn't encounter anything like that during the audit. And questions for me? I do have the financial statements. You asked me which sections would I want to dive into or point you towards. I mean, I think the pension disclosures are probably the most complicated. I'm sorry, I've got a question here from David before I continue.
No, you go ahead. I have a question when you're ready to take commission questions.
Okay. So again, the pension and OPEB footnotes towards the back of the end of the footnote disclosure section, I think, are the most complicated, and that's where there were a lot of questions last time. But then again, a lot of that information is pulled directly from those actuarial reports that you were discussing earlier. So I'm not sure of what would be of most interest to this commission. I can't talk about the process and the timing, because I know that was something that was important overall. I am very appreciative to Randy and Jennifer Murray, who assisted us all the way through the audits. I know that we are a little bit later than we had originally anticipated issuing, and that's mainly due to the large number of adjustments that were made after the EFS closing. So as you know, EFS is the accounting system that you maintain your books and records. And that's where we pull a lot of our information from directly for our testing. However, with this year's audit, there was just a lot of bookkeeping and cleanup that Jennifer and the county had to make before the records were in shape enough for us to actually come and begin auditing. And in fact, some of those errors were still and corrections were still being made after we kind of started the audit, and that creates a real slowdown when we're trying to audit the financial statements, but we kind of have a little bit of a moving target. So overall, there was a exceptionally large number of adjustments that Jennifer ended up booking. And Randy can speak more to that if you do have questions on the specifics. But that was really the key piece to the timing of the audit is we just want to make sure that we're actually dealing with final numbers before we start to do the audit so that we don't have to go back and do a bunch of rework on sections that we already thought were audited, but then changes were made after the fact. So, and I think we're all aware of the reason for that, as you know, Myrna has just come on recently, and I'm assuming is reworking some of the financial processes as she's getting settled in. But that was what we experienced for 2020 and 2021 was just a large amount of adjustments that needed to be made to get the balances from EFS to these financial statement audited numbers. All right, and that I got two questions, at least two questions right now. So,
Kellin, I'm going to jump in for just a second and then pass you on to Dave first and then Barbara. But first of all, thanks very much for the overview. Thank you for getting these done and presented to us in time for this meeting. We really appreciate it. And I just want to, I guess, ask, I'm hearing you say there was a large number of reclassifications that had to happen after the books had closed. But going back to your next to last slide, you saw no evidence of any fraud, any inappropriate activity. And I'm assuming it's your expectation that with Myrna on board now, we'll be able to reduce the number of these types of reclassifications in years ahead.
yeah, that's a fantastic question, and I would like to elaborate. So, you know, I don't want to be confusing or sending mixed messages when I explain this, but so EFS is your accounting system, but us as auditors, we don't consider your books closed until you basically tell us that your books are closed. So just because transactions are being processed or adjustments are being made, or as you said, reclassifications are being made, we don't consider that to be, you know, errors or corrections that, you know, we as the auditors identified. Essentially, these were just normal bookkeeping cleanup adjustments that you would typically process in June or July, as you try and get as many of those as you can done before EFS is closed. But it's definitely not unusual to have some number of those spill out into August or maybe even September. I think in this instance, though, there was just an overwhelming number that Jennifer had to work through. And again, Randy could speak to the specifications of exactly how much there was. But yeah, those were not, that was not fraud. Those weren't errors or findings. And that's why we didn't have a control deficiency, because Jennifer essentially cleaned up those adjustments as part of a prolonged year-end close process.
Got it. Well, thank you. And we'll do our best to make sure you don't have to deal with that again. Dave, why don't you go ahead with your question or questions, please?
Yeah, I have two questions. First of all, Kevin, Finance Committee has been through a lot over the past year. I'm sure you've talked with Randy about the various anomalies. I love Myrna's word there, anomalies that we had to deal with. Some of them were quite significant. In fact, we had to essentially discard our spreadsheets and you know, issue new statements in the subsequent months, having the various corrections that Randy was able to make. Randy said, it goes down in library history, we don't know what we don't know. Did you find anything that he has not caught? In other words, stuff that's not in the recent spreadsheets that we got that you think is significant to mention?
Okay, so I can't speak to anything that you've seen recently or subsequent to June 30, 2021. That's the last information that I've seen. During the audit, there was a couple items that we did discover that are included in these financial statements. So a couple of transactions that took place near year end that were not originally recorded that we did catch during our audit procedures. But I'm not sure that that's really speaking to what you're getting at specifically. And I'm not sure how many of the audit adjustments that Jennifer and my team have worked through, if that's the information that Randy's been presenting to you.
Well, let me just give one example, and this has been made public. It was a $3.5 million accounting errors, partly because nobody had been told to keep track of the checkbook. And I'm sure it's been straightened out. That's the kind of thing I want to make sure that there aren't any more like that you caught that Randy has not included. In other words, is the stuff that we received here in the latest spreadsheets solid? Probably that's just not a good question to ask, but I don't know how else to phrase it.
Sure. So again, we didn't find anything nearly of that magnitude. Again, our investigation pretty much stops as of 6/30/2021. So as far as recent financial information or spreadsheets that you've been reviewing, I'm not sure of the specific timeline that you're referring to. If you're talking about financial information as of November or December, we haven't looked at any of that information yet. That would be for next year's audit. So just during the audit, the period that we audited, we did not see anything nearly to the size that you just discussed.
Okay. Second question is, I'm pleased to see you expect to issue an unqualified opinion. I noticed that the document that we were sent ends on the sheet that says compliance, and there's nothing following that sheet. What happened to it?
Yeah, so that's just our firm's policy that we don't send, because PDFs are so easily to manipulate. It's just a quality control process that we don't send our opinions in draft form unless it's absolutely required. So I'm here to speak to those that, again, we didn't find any control deficiencies or any reportable matters that are going to be appearing in those opinions. But again, I do go back to what I said earlier, was that there was a very, very large number of adjustments that needed to be made. We just don't consider those to be audit findings because those were being worked out by Randy's team. And therefore, in our view, from the audit perspective, the county is part of your internal controls and part of the bookkeeping process. And that's why we can have a situation where there are hundreds of thousands of dollars worth of adjustments that are being made after year end that we don't consider those to be control deficiencies or reportable matters, because those are still being handled basically internally and not adjustments or errors that are caught by the audit team.
Oh, well, that's good to know that Randy is part of us. That clears up a lot of my concerns. So thank you.
Yeah, and it is, I think it's a really important distinction to make, that from our view, from the auditor's perspective, all of those adjustments and corrections that were caught and made by Randy and his team, those are all essentially kind of corrections, in our view, booked by the library and not booked by us. So if we had been the ones who had made all those adjustments, I'd be telling you a different story. You'd be, I'm not sure that we'd be able to issue a qualified opinion. You'd have control deficiencies. It would be a much darker presentation. But so long as those items are caught by Randy's team before they get to us, we don't consider those to be control deficiencies, even though that still is an indication that there may be processes internally within the library that you're going to want to tighten up and true up before the end of this next fiscal year, or before you disengage with the county. But it would be my recommendation.
Okay, Barbara and then Tom, please.
Right, thanks, Kellin. Appreciate the report. We've all been waiting with bated breath. So I spent quite a bit of time on this morning. I'll try to keep my remarks to the essential ones. On page 7 of your report, page 27 of our agenda, there's some language about Measure Y and how we've been built up quite a huge surplus in there. And I don't think that the language is probably sufficient at this point to say a large surplus was mainly due to difficulty in filling open positions. We started off having that as our explanation, but I think it's the surplus the size as it is. I think there's more to it now, having to do with probably capital expenditures, plans to improve the facilities we haven't been able to carry out for all kinds of reasons, including, the pandemic and the everything that we've gone through in the past number of years. But I think that language needs to be more detailed and more complete, because I don't think it's just staffing that have built up a surplus of that number. So
Okay.
that's a comment.
Can so the management discussion and analysis is a required supplementary information that is unaudited. So really the purpose of that is to give management a chance to tell the reader their side of the story outside of the numbers. So we have a lot more leeway with what information and how that information is presented is within the MD&A. So I'm happy to make any changes so long as it's not, incorrect,
Right.
as a matter of fact.
Right.
So any sort of verbiage that you want to change, if you would just communicate that to either myself or Randy and his team, we can make those changes. That's not a problem.
Yeah. Well, I think, staff's fully capable of doing that. I just think there's a more complete picture there that we need to lay out, since this is, for public information. I hear what you're saying. It has to be correct, but I think there are, there's words that we can add there. On page 26 of your report, page 47 of our agenda packet, way down at the bottom under capital improvement, I'd like to mention some, a clarification. It says that the library has adopted policy to pay for priority projects, blah, 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 through the creation of new buildings and facilities, buildings/facilities. I would ask staff to maybe submit a better word than creation of facilities, because that's not really what we do. We staff and the interiors, but we don't create new facilities. So I'd like suggest a correction on that word. I would like to go to page 37 of your report, page 58 of our agenda. And under this is on our pension plan. And as we know, CalPERS creates the assumptions, but at the bottom line under actuarial assumptions, investment rate of return, 7.25 for fiscal year that just ended. It's always been my understanding that the discount rate and the rate of return of investment were the same thing, but that it's 7.25 on that page. And if you go to the next page, well, we're talking about a discount rate of 7.15. So they're slightly different numbers. But if you compare that to the OPEB report, where did I see that? Under the OPEB, they are the same number. They're both 5% as the assumption of the rate of return and the discount rate. So I wondered if you could clarify that, why those numbers are different.
It's a great observation, and I'm not sure if that is either an error in this report or an error in the CalPERS report, or if there is another reason why those numbers would be slightly different per the CalPERS report. I can't answer that question off the top of my head, but it would only take me a matter of minutes to find that in the CalPERS report and report back to you
Okay.
after this meeting.
Is it your thought that that should be the same number, the discount rate and the rate of return assumption rate?
I would say that's my usual experience. I can't think of an example off the top of my head when they weren't the same rate, but I would also say that there are a number of unusual items that we find every year in the different pension reports. So I don't want to assume that it's incorrect as stated, but you're right. I do believe that's usually the same number.
Yeah, and certainly,
Sorry.
and so same when we get to the OPEB part, it's the same number. Let me go to page 39 of your report, page 60 of our agenda packet. Under contributions, the last 3 lines there about the additional $2.25 million that we put in there. We had OPEB policy that we were going to put in additional $3 million plus $750,000 out of every year's operating expenses. And I don't challenge this number at all. I just want, I guess, this opportunity to ask staff to make sure that we indeed caught up with, I've seen it before and I believe that it was accurate. So maybe some of it was put in before these 2 numbers. I'm not sure, but we just need to verify and draw a line under it that we have actually put the extra $3 million toward it and $750,000 out of every operating year's expenses since that policy was adopted. I think I'm trying to go quickly and I think, let's see. Okay, on commitments, let's see, page 46 of your report, page 67 of our packet. This talks about our leases. And obviously the significant leases for our new administrative office for headquarters. But it talks about the Roseland lease. And I think that there was an offsetting amount that was contributed by the city of Santa Rosa toward the lease. And I just wondered if you had any information about that or if staff could provide that. I think it should be part of the narrative. I believe it was $150,000.
Barbara, I think the timing, I don't think that we had entered into the lease prior to the end of this fiscal year, had we?
Oh, yeah. The lease for Roseland?
Yeah.
Oh, yeah. Well, that's been leased for a while. We haven't been in it, but what was leased a while back. I see it says the library entered into, wait a minute. 2019 entered into a 5-year lease. And it was somewhere in there that the city of Santa Rosa was to allocate $150,000 toward that lease.
Yeah, that is not information that was presented to us. So if that did take place within the period that we're auditing, well, we can get that trued up, but that's not information that has that came our way.
Good catch.
Thank you. That's it for me for right now.
Thanks for the close reading, Barbara. Tom.
I don't really have questions. I want to emphasize that this is a 2-year report and we're up to date. And I think we need to emphasize that when we present it to the board, that we've got ourselves up to date with our audits. And the other thing I want to say is I want to thank Myrna and Randy and their crews for all the work they've done. I really have a comfort level with Myrna. She's getting her head around all these very, very complex things. Randy's done a great job and we're digging ourselves out of a hole. Thank you.
I would second all those comments. I had a couple of questions, but before I did, Barbara, your hand's still up, or did you have another question or? Okay.
No, I always forget that I have to take it down. Sorry.
Okay. Tom, are you
I'm
done?
Okay.
Okay.
I'm confused.
So Kellin, not to put you on the spot, but I have a question for you. Basically the same question on page 56 and on page 58. And then these are pages that have to do with our deferred liability, the pension and OPEB. So toward the bottom of page 50, this is 56 in your report, so it's I'm not sure where it is in the document here, Jen. Sorry. Barbara was more prepared than I was in this regard.
I'm looking at it, Andy. So
Near the
I'm-
very end of the Pisenti and Brinker documents, Jen. And
Page 78.
thanks, Tom. The number is plan fiduciary net position as a percentage of total pension liability. Okay. And we're tracking this over a period from 2014 to 2020. And the good news to me seems to me that there's a modest improvement. This seems like a number that should be lower rather than higher. And over the period, it's gone down, not in a straight line, but overall from 84.02% to 81.46%. And my question is, as you deal with other public agencies like ours, what should it be? What should be our target for this number? And the same number appears on page 58 with a much more dramatic improvement, but our net position is pretty close to the same. We're at 80.57% after starting off quite a bit higher.
So I'm not going to get too much into this, but the way I would read it is that you'd actually want this number to be higher. I think this is saying overall how many assets are in the plan. So what's the plan's net position relatively compared to the amount of the overall liability. So I think as
it's the other way.
Yeah, so as you approach 100%, I think that's the direction that you want to go. I don't think, and maybe this would be a question for a representative from, I don't want to say PERS, but somebody more skilled in this area than I. I think when you look at these, you have to consider a number of other factors. So first off, these are based on actuarial assumptions that are highly volatile and are spaced out over a very long period of time. And so I think you have to look at this, relative to the other financial information presented in the financials, the overall health of an organization. So certainly if the percentage was low and the organization was not doing well and trending in the right direction, I do think that you could draw some conclusions about potential shortfalls in the future. But at the same time, given the library's overall relative health and compared to those percentages, the total dollar amount between the net position and the liability, I view that as relatively healthy and a relatively small gap. But that's really my own opinion. I don't, as an auditor, I don't really think that I'm qualified to give that opinion. And I do think that that's more of a responsibility for you, the finance committee and the commission to really kind of analyze and get comfortable with, as opposed to just, an auditor's opinion. So I'm kind of speaking out of both sides of my mouth here, where I say I think that's a relatively healthy position to be at. At the same time, these are highly volatile projections that go way into the future, and how you feel about them, I think would really depend on, what position or what the angle that you're looking at this from. From a commission member, you might not feel as comfortable about it as opposed to an outside observer. But based off of the reports that I've reviewed, I believe this is a fairly high number overall. But that, again, that without context, that doesn't really, what does fairly high mean? It really just depends on your overall view of the financials. That I don't know if that was a good answer or non-answer, but I really can't. It's really a position for management to analyze to determine whether or not it's a healthy position or an unhealthy position. It's really not for me to say.
Okay, fair enough. I'm not trying to put you in a bad position, and I appreciate your clarification. I think I was looking at one line and thinking about another. So some of the things for us to be focusing on are what's the net liability? And in general, we would want that to be lower rather than higher. What's the net liability, or what's the net position as a percentage of the total liability? And we would want to have a high number there. We'd want to have most of the liability covered, or at least a healthy amount. And these are questions we need to bring up with Bartel Associates when we talk with them.
Yeah, I think that's everything you just said, I think is correct.
Okay, thank you. I really appreciate you bringing this draft to us, and I want to add my thanks. Randy, I know we can't see you, but I want you to know how much we appreciate the work that you and your team did in helping Kellin and Pisenti and Brinker, and also in finding and cleaning up those errors in our reports prior to the audit. Made a big difference, and very, very grateful to you. Anything else for Kellin? Okay.
I would just like to add one more thing as it relates to Randy's team and Myrna coming on board. I would highly recommend going through all the adjustments that Randy's team had to correct before they presented them to us to audit, simply because that's going to highlight some areas of improvement within the library's financial reporting. And I think that would be a tremendously valuable exercise for the library's accounting team to undertake, to meet with Randy and go through all those adjustments so that you can kind of see where the majority of the time was spent, and to hopefully avoid any sort of duplicate adjustments needing to be recorded going forward.
Appreciate the recommendation. Myrna, are you okay with that?
And she might have already too. She's on. Myrna, you're on mute.
You're on mute.
Yes, definitely appreciate your recommendation, Kellin. We have some training and work to do with our accounting staff.
Yeah. Kellin, thanks for joining us today. I know you're going to be back for the commission meeting, so I want to let you go. We value and appreciate your time. And again, thanks to you and your staff for turning this around in a timely way for us.
I greatly appreciate it. I appreciate the opportunity to meet, and I'm so thankful that you guys are looking at this so closely as an auditor and a community member. It makes me happy to know that you guys are doing your fiduciary duty, reviewing these so closely. Barbara, I do want to follow through with your questions and comments about the rewriting of the language of the MD&A. Would you communicate that directly to Randy or his team, or to me one way or another, and we can get that incorporated and wrap this up as quickly as possible?
Yeah, I'll go through Ann and make sure we're, we come up with something.
Fantastic.
Yeah, work with Ann for that. Yeah, thank you.
Okay, well, thank you so much for your time. And again, I appreciate the opportunity to speak directly to you. And if you have any questions, I'm available at any time for email or phone call. So thank you very much.
Okay, thanks, Kellin.
Thank you.
Thanks, Kellin.
Okay, we're gonna, and I want to also thank this committee. I know our meeting is running longer than the hour that we optimistically budget for it, but we do have important things to cover today. And I wanted to move on to the next item on the agenda, the major revenues allocation guideline. And Myrna, I'm going to turn this over to you in a second, but I wanted to, I guess, comment on it and ask a question before you get started. I really appreciated the thoroughness with which you and your team have laid this out, and I wanted to maybe jump to the conclusion and see if I understood what you were saying. Basically, what I took from this is that you've created a baseline by going back and looking at what expenses were prior to the influx of Measure Y revenues. And what I believe you've said is that in order to ensure that we're using Measure Y revenues to supplement but not supplant, we need to, first of all, be sure that revenues in each category or expenses in each category that are allocated to Measure Y are above and beyond what that baseline was before we started receiving those monies. And that as long as that's the case, we can allocate a given percentage, mostly 33%, but in some cases 10% of the total expenses to Measure Y revenues, but only if the amount that's paid by property taxes stays above the initial baseline. Is that, am I understanding the general gist of this? And again, you're on mute.
You're spot on with one of the two requirements that this policy is addressing. The two requirements laid out in the Measure Y ordinance. One requirement is to supplement and not supplant, therefore creating the baseline as our bright line demarcation as to we will not go below the baseline expenditures. The other requirement is the expenditure plan. The expenditure plan in Measure Y say what is allowable in terms of ensuring that we're covering those expenditures listed on in the expenditure plan. So that's why the chart at the end was created to delineate how each of our service divisions supports directly each of these three sections of the expenditure plan. So that's how the guidelines are created to meet those two requirements of Measure Y.
Okay. I'm going to ask for a little guidance here because in all the time that I've been chairing the committee, I don't think we've ever had a motion. But I think that the correct sequence of events is that somebody moves and seconds, and then we have discussion. Is that correct?
Actually, if you look at the Rosenberg rules, we're allowed to ask questions that are generic about it before we actually get to a motion of staff. You can ask staff clarifying questions, I think.
Okay. Is that the approach you prefer to take, Tom?
I'm just telling you what Rosenberg says.
Okay, well, I'm okay with that. Why don't we open this for questions to Myrna about the draft motion, and then let's.
I have a brief presentation that summarizes it.
Great.
If you don't need it, we could jump
No.
to questions.
No, we need it.
Let's go ahead.
Okay.
I want to give you a chance to present to us. I'm sorry I jumped in ahead of you.
No, that's okay. No worries.
And the only other thing I'm going to ask is let's keep in mind that the motion here is we're not moving to approve this. We're only moving to present it to the full commission at the meeting on February 7th. So with that in mind, Myrna, why don't you go ahead and share the presentation with us?
Okay. 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 So this is, of course, the proposed allocation for major revenue sources. So you cannot speak to Measure Y without having an impact to property tax. So I wanted to couch this at the highest level, which is our two major revenue sources, which are property tax and Measure Y sales tax. So like I mentioned earlier in a few minutes ago, is that one, the commission requested that staff formalize guidelines for allocating expenditures to Measure Y. And in reading Measure Y, we checked in with legal counsel to ensure that we were meeting the requirements of Measure Y, and we could advance guidelines that do that. There's two major requirements in Measure Y, and one is that the measure states that the tax revenues are to be used for the services and projects enumerated in the expenditure plan. And number two, that the intent of Measure Y funds are to supplement existing library funds and not to supplant those existing funds. So in order to know whether we're supplementing, what are we supplementing to, right? There has to be some ground level, some baseline that says, well, what were we spending on prior to Measure Y? So that therefore it begs the question of a baseline, and creating a baseline of property tax expenditure levels prior to receiving any Measure Y sales tax. And fiscal year 2015-16 is that year. We started to collect Measure Y in the middle of fiscal year 16-17. So it muddles the waters, and this fiscal year 15-16 is very clear that there are no Measure Y funds involved. So I presented the actuals expenditures by division for fiscal year 15-16. And the bottom line that year, the total expenditures were $16.6 million, with the bulk of the expenditures in public services at 8.6 million, materials, or we now call that division collections, at 2.7 million. Administrative services, historically, the library had one section to track the costs that the expenditures for auditing and accounting services. Budget and finance division, facilities, human resources. Back in this fiscal year, we did not have marketing or graphics or communications or fund development. And then information technology, as well as executive services, which include the office of the director. So this would establish the baseline expenditures for property tax levels, expenditure levels. So in establishing this baseline, again, the way we would then use this baseline is that we would look at the annual expenditures. So at the time that the commission approves the budget, the library will know, well, what is your total budget? And of that total budget, there will be a percent of those expenditures allocated to property tax and a percentage to Measure Y. And the first step in doing that is to, one, make sure that property tax allocation is greater than $16 million, which is our baseline. And number two is the formula that we presented, which is to allocate, to further ensure that we're supplementing and not supplanting, is to allocate a greater portion of the expenditures to property tax and at 67% and 33% of the total expenditures to Measure Y. So that meets the purpose of one, the baseline, and two, supplementing and not supplanting. And number three, that we have a consistent methodology to apply in the future. What has been happening currently is that there is lack of this methodology and lack of clarity. So that's sometimes why you see a lot of these adjustments is like, well, should we adjust? Should we be charging to Measure Y? Should we be charging to property tax? That is some of those adjustments can fall back to this lack of clarity. So historically, we did analysis, and I do work closely with Randy on this, and we looked at the history over the last 5 years of what those percentages were. And we found that generally the property tax picks up 67% of all expenditures, and the and Measure Y covers 33%. So we wanted to have ensure that we had some foundation and justification for that split. So all of the details are explained in the paper, but in summary, we would allocate it in this way. If you look at the chart that is at attachment 1, it clearly delineates how each of the divisions supports the expenditure plan. And therefore, with that justification, each division, essentially every division within the library will be allocated, will have some expenditures allocated to property tax, 67%, and 33% to Measure Y, with the exception of administration. With administration, 90% of the costs of the executive services, budget and finance, human resources, and fund development will be covered by property tax. 10% will be covered by Measure Y. And the justification is that the level of effort since Measure Y has been adopted has increased the level of effort for every one of these divisions and operations of the library. So that's what I have. I welcome any questions.
Okay, thanks for doing that. I think this is a great summary. I really like the approach you've taken. Dave, I see you've got a hand up, and then Barbara. Go ahead, Dave.
Yes, I'm just delighted with this, Myrna. It's just what I hope to see. It's something that's very intellectually consistent, and it's bulletproof. It clearly explains what we're doing. So I'm really impressed with this. My only question is, first I have a quibble, is that what we've got here is a proposed allocation. Staff proposes, staff recommends, blah, blah, proposed allocation. When it comes before us in front of the commission, the proposal language should come out and it should say, this is the policy. So that's a quibble. The question I had is, assuming the commission adopts something like this, which I'm sure it will, are you going to retroactively redo our financial statements for the past?
My preference is to apply it going forward. So definitely apply. It would be great, but it is the desire of the commission to approve this, and if it does approve it, we can apply it to the next fiscal year. that's what the policy describes, that it would be, the commission would approve this allocation during the budget process. And we can also discuss if going forward from, month of February through the end of the month, end of the fiscal year, to apply it as well. I mean, you could make that decision. Retroactive, we could do that. I've had conversations with Randy. It just, where do we want to spend our time? Do we want to spend our time, working on our, we just have limited resources. We can do it. It's just, how do we want to prioritize our time? So again, ideally, it would be going forward.
Yeah, I would certainly support that, Myrna. I know we've had the Measure Y committee and the auditors looking at how expenses have been allocated in the past. I'm not sure the value that we would get out of applying it retroactively, but I agree with Dave that I'm really impressed by the intellectual rigor and really like the approach that you and the team have taken. Barbara, were you next?
I think I was, but.
Okay, go ahead.
Defaults to Tom. I have asked for this for a long time, so I am thrilled to see it. I copied it, printed out last night. I went through it the first time, and I had that same reaction. Like, this is great. This is just what the measure was for, and it takes the priorities and applies it to, there's justification for all these things. And I went through it again today, and I was a little less sure about the kind of the general concept. If you take as a baseline, which I agree, we need a baseline. The baseline was the budget as it existed in 2015-16. So, and that was like $16.5 million. So as long as we don't spend less, and the assumption is that was all property tax. So then we switch from the expenditures to the money coming in, the revenue. And so we say, well, the revenue coming in is roughly, 2/3, 1/3. And so then that we start using that as the way to apply that. I'm not sure that makes sense, but I'm, willing to, I guess, accept it for now. The thing that I wasn't quite sure about is because it's a kind of a sweeping, assumption, about how the money is expended. I really felt that a Measure M or Measure Y, there was a real forceful case to fix up the facilities. And I, we talked before in the audit that, we're really built up a large surplus in there about facilities. And I think that if we use the same formula of 67, 32 or 33 or whatever, 33, it doesn't really quite take into effect the real need that we made to the public for fixing up our facilities. It was more than buying furniture and stuff, I think. So that I have a kind of a qualm about applying it to that particular category, because I think that was something that we really felt was really important. And I also, because Measure Y folks, initially the Measure Y Oversight Committee was, trying to get its feet under the ground and then kind of accepted kind of general things. Well, there's lots more programs and so forth. And over time, they become more and more detail oriented and looking at lots of things very specifically. I'm just wondering where in this process we include the Measure Y Oversight Committee in perhaps a discussion before we go forward and adopt this as a formal policy, because that is the work that they do for us. That is the work that they do, for the public. And I think that it's kind of disregards maybe their role to say, well, we're just going to adopt this and we're going to tell you about it afterwards. I'm not saying they have the power to do it at all. I'm not saying that, but I'm saying that I think they're just out of respect for the role that they play and the job that they have to do, to have a discussion with them, either the Finance Committee and the Oversight Committee or the full commission, dual meeting or something like that, to just really kind of talk this through just a little bit, because we just want to get it squared away. We'll get everybody in agreement. And then again, this is what we've wanted as we have it in writing going forward. It doesn't matter who's on the commission, doesn't matter some measure why, it's spelled out and we all feel good about it. So that's my, those are my comments and my suggestion. Thank you.
Well, I feel that it's the pleasure of the board on how, what they need in order to consider this and take action on it. I don't know when the next oversight committee is scheduled at this time, but if that is the desire of the finance committee or the commission, I'm happy to do that. And have any comments on this?
You're asking me? I'm sorry,
Yeah, historically, I'm new, so
yeah.
any other
Yeah.
perspectives?
I apologize. My connection is unstable and I've been cutting in and out here. So I'm trying to follow the conversation. And I understand Barbara wanted to share this idea with the oversight committee. I think we can certainly do that. I don't remember. I believe their next meeting is in March. We can check on that and then get back to you all about timing for that. Barbara?
Yeah, I'm just worried about just having a special meeting. I mean, I saw in the document somewhere that the commission requested this policy be in place before the next budget. I don't remember asking for that, but it's nice to have. I don't think it's critical, but I think asking for a special meeting between the Measure Y Oversight Committee and the Finance Committee meeting and the Finance, for example, would be one way to go. But if we want to wait till March, that's fine with me too.
Tom, I know you had a hand up, but I want to go to Deborah on this because I think, Deborah, you're going to speak specifically to the point about how we involve the Measure Y committee. Is that right?
Yes, that's right. Thank you. And also, I think that what this document does is clarify things and will bring us all, I believe, closer together. We seem to have drifted apart over the last couple of years, the Oversight Committee and the Commission or the staff. And so I think that I'm not sure that we necessarily need a joint meeting, but we will certainly do something to make sure that they're informed. And but honestly, I think that this is more a clarification of some of the issues that especially quite recently have come up. So I'll talk to the commission about this. I think it's probably a larger issue than the finance committee, but thank you for bringing it up, Barbara.
But Barbara, thanks, Deborah. And Tom, I am going to get to you, but I do want to disagree, Barbara, with one thing that you said. I think it's vital that we resolve this prior to going into the new budget cycle, because this will greatly shape how Myrna works with the division heads in working out their budgets. And if we don't have clear guidelines like this, they're going to have to end up redoing it. So I think the sooner we can resolve this, the better it will be. And I would agree with what Deborah said. I think it's really a clarification of what's been kind of churning under the surface, but perhaps has not been clearly articulated. So that's my view. Tom, I want to let you've been very patient, and please go ahead.
Well, one of my points I had to make when I first read this thing is we need to run it by Measure Y committee, because we can't act like we're being dictatorial. This is it. This is what it is. We need to work with them. We don't want any bad publicity to come out where they have sour feelings when we're trying to go back for renewal of the tax. So I think that's just good politics that we run it by them in some way. Um,
Did you have a specific recommendation on how best to do that?
I would suggest that we call the chair and say that this is going on and this has happened, and send her a copy and say, we think we'd like you to, to have some input in this. I do remember I've been going to their meetings while they're on Zoom, and there was a question about getting some criteria out other than just the general kind of stuff that they've worked with so far, creating their own criteria at something. And I remember the chair said, well, that didn't seem like that was necessary. I thought it was dismissed rather out of hand, but I just think we need to talk to them and let them know what's going on and say, do you have input? Do you think this is good or bad?
Okay.
Because we got some potential problems there. I don't want bad mouthing.
Yeah, no, I don't
Okay.
think any of us would want that. Yeah.
Yeah. Okay, I have a really picky question on the first page 1 of the report, which is actually the, page 84 of our thing. Starting in about in the middle, there's a quotation: specific library services and projects, etc., are as follows. And then it goes 1, 2, 3 with A, B, C, Ds under it. I think that whole bottom 3/5 of the page is a quotation, and it should all be in quotes. And when I looked at the copy I have of the document, the Measure Y statute or whatever it is, I think the ones and the letters were reversed. So somebody needs to look at that very carefully to make sure it's accurate, because I don't want to have anything that is beginning to be inaccurate there. So that's just pickiness. I guess the question I have is, Myrna says there are 2 points. One, you've got to make sure that you have a percentage to Measure Y and a percentage to property tax. But then she says also the second part of that is we need to meet the criteria, which are that quoted language. And I'm not sure that the percentages by themselves, if we apply it across the board, is bringing into consideration the criteria, the specific criteria that's quoted there. And that's, I think, something that has to be addressed. Is staff, when they're coming up the budget, dealing with those criteria as well as the percentage, or is it just a percentage that's taking a place? I don't want to make trouble, but I'm afraid that somebody might take that attitude.
Okay, so I appreciate your assistance on this to make sure that, if you have a question, I'm sure others will have a question, is that number 1 criteria, again, is establishing the baseline so that we understand what we're supplementing, that any expenditures of Measure Y is supplementing the baseline. The other is going forward in terms of the split. Well, first, the other criteria is to make sure that all of our expenditures that Measure Y is paying for is tied to the expenditure plan. So we've got to make sure that everything that Measure Y is spent on enhances, maintains, provides, right? Those are all those key words, the expenditure plan. And so those are the 2 criteria. The other is efficiency. And it wasn't spelled out that way, but when we need to implement on our end, let's say a facilities project, right? Whatever it is. I know that I know that I need to spend some, I can't pay for the whole entire thing with Measure Y. So what portion do I allocate to property tax and vice versa? So we need some methodology to know what proportion we're going to allocate to each of those funds. Since we do, I think the common understanding is that both funds will pay for that capital improvement. And so that helps with an efficient implementation of our budget. What has happened now is that there is no clarity on how much does Measure Y pay for? How much does property tax pay for? So it's the lack of clarity provides inconsistencies. It provides a lot of room for error, a lot of confusion internally and externally.
It's very difficult to implement. And I understand it, and I understand exactly what you're looking for, something that is a lot easier to deal with. I am making this position because I have been told when I made a statement that the new materials handling system that we have at Central, not at Central, at the headquarters, which is, we spent $1 million or so on this thing, and it's really a nifty thing. I think it's the greatest thing in the world. And somebody told me that, I think it might have been Deborah, that one member of the Y committee did not think that was a new item because it was just handling books, which had already happened. And so that didn't really meet the criteria of the quoted language.
It met the criteria for the majority of the oversight committee.
Yeah, I understand that. I'm just bringing this out. And so I'm okay with presenting it this way. But I think we need to get somebody, the oversight committee, to say, yes, okay, or bring it out.
Well, the criteria would be, I think the criteria would be read the expenditure plan. Does it enhance collections? So it allows for our shelvers to spend more time shelving and being, available versus, being in the back, just, sorting through books. Does it help with library services overall? Those are the criteria.
I do not object to it at all. I think it's petty little stuff. I think this specific language was put in there so that we could convince voters that it's special stuff, and we're now dealing with a lack of foresight on some of the consequences.
And that's the other difficulty.
I can't argue about it. I mean, it's okay, but I think we got to go by
you
why.
Understand the other difficulty is that if we take project by project, that is not as efficient as meeting the broader criteria.
I agree. I do not disagree. So, but that's, again, this has to go before Y to see what they say, just to make sure that we don't go to the commission, approve something, and then somebody starts complaining after the fact.
I will talk to the chair as you suggest.
Thank you. I think it's a really good logical plan. I like that. That's the way my mind works. It seems rational to me. I wish that it had been drafted slightly differently so we could just have gone that way in the beginning.
Right.
Thank you. I'll be quiet now.
Well, Deborah, if you're able to talk with the chair, I would feel much more comfortable bringing this before the full commission.
Happy to.
Okay. Barbara, you still have a hand up, or is this a new hand?
This is a new hand.
Okay.
I have two things. I want to go back to, these were some of the points that I was trying to make, and apparently I don't make them myself very clear. But under item 3, page 84, item 3, maintaining aging facilities. This was a big part of passing Measure Y. Our facility, and I do not believe under our baseline budget, we were maintaining our aging facilities. So this is a whole new cost. And that's why I don't think the 67-33 split is a good one to apply to our facilities. And
Are you,
secondly,
I'm sorry, clarification. Are you saying that you think that Measure Y should account for more than 33%?
I am.
Because I do want to point out on page 86 that there was money that was being spent on facilities. Now, we could argue about whether it was maintaining aging facilities or not, but I think that Myrna is still right to have a baseline figure. And I'm also going to say, and if you disagree with me, tell me, but I think we can't go wrong under allocating to Measure Y. We can raise questions and issues if we're perceived as over allocating to Measure Y.
Okay, then what I would suggest is that we get the detail on what's in the baseline expenditure, page 3, page 86, in that category called facilities, $2.3 million, that we find out what's in there. And we find out if we were really maintaining our facilities with some of that money, because I don't believe that we were, but then I can be proven wrong, and I'm happy if that's the case. Secondly, we do not address the cost of the HQ lease anywhere in here. Now, under the baseline, we didn't have an HQ. We were smushing all of our administrative people into Central Library in Santa Rosa. And then with this large expansion of staff and all the things that were required, we had to have a separate headquarters. And the lease on that, I mean, it needs to be thought through and talked about. But in the case that you make here, Myrna, under the division expenditures aligned, there's several of these categories. They're countywide support for the materials, countywide support for information technology, countywide for support for facilities, countywide support for communications. These are whole system-wide divisions that the whole system depends on. They have to have a place to work. And so I think the fact that it's a 67-33% split isn't accurate in terms of, again, the baseline, and because we didn't have any expenditure in the baseline and we had to have this facility. So, I think there's been pieces of conversation back and forth that should all be funded by Measure Y, or I don't know what the percentages are, but this is a really good topic to me to bring up. And I would really like to have a joint meeting and not have it have an intermediary. I'd like to have these discussions at least once with either our commission or our finance committee and the oversight committee, and just talk about these things. So we're all in the same place at the same time, and we can talk this stuff through, because if not, there'll be misunderstanding or misinterpretation or whatever. If we're all in the same place at the same time, we just have a chance to talk this through. Let's just do it once. Then we'll establish what we're doing, and we'll all have been there. So, but I definitely think that we need to talk about facilities. I think we need to talk about the HQ lease. And part of that, I think I read somewhere that now we're thinking about buying a building instead of having a leased headquarters. Now, if we are having that conversation, we definitely need to talk about whether Measure Y funds can be used for something like that, whether it's just a third, or 2/3. But it needs to be fleshed out some more, that topic, of specifically of facilities and leases. Thank you.
Erna, where does the headquarters lease fall in the proposed allocation by major expenditure category? Is it considered part of administration?
No, I believe the lease is in, I have to double check, but I believe the lease is under facilities with all of our leases.
So in that case, if it were under facilities, it would be 67%. And Barbara, are you saying that you think it should not be 67% property tax for the lease? Or are you saying that you feel we're going to be getting pushback if we spend 33% or allocate 33% to sales tax?
I don't know. I don't know what oversight committee, but I think you could certainly make the case that all of these people have to have a place to sit. It should be completely funded by Measure Y. You could make that case. But my point is it's to only have Measure Y pay a third of it, it seems underfunding to me. And I think this discussion needs to happen with the Measure Y people. We need to have, because, if you want to talk about a red herring discussion, have people talk about, oh, you have this big building for headquarters. And we just need to have a conversation about how it should be paid for. And if we're going to end up buying eventually a building for headquarters, how that should be paid for.
Okay.
It's necessary because we have such a much larger library than we used to have because we have Measure Y. And it may be part of the reason we have such a surplus in Measure Y because we aren't charging enough to Measure Y fund. I mean, I don't know. It's just, but it's a topic. And I feel frustrated because, I've talked about this for so long. And now we really have a really great document and we got it Friday afternoon and this is Monday. And I spent a lot of time going through it. I'm sure everybody did. And it just seems now that I believe it's much more than a clarification of what we've been doing. I mean, it's much more than that. There's a lot to this, a lot to think about. And I think it's worthy of more discussion than acting on it today.
Okay, Tom, I'm going to come to you, but I just want to clarify because here's what I think I'm hearing you say. Historically, the function of the Measure Y committee seems to have been to kind of police the line and make sure we're not charging things to Measure Y that they think we should be paying with property taxes. What I believe I'm hearing you say is that this is not aggressive enough in allocating more expenses to sales tax revenue, that you feel that a larger percentage than indicated here, that a case could be made that an even larger percentage should be allocated to Measure Y. Is that what you're saying?
I'm saying it's worthy of discussion. I mean, my opinion is just one opinion, but.
Well, I'm asking you your opinion. That's what I'm trying to.
Okay.
Okay, that's all I need to know. Thank you. I just want to be sure I understand that. And I hear that you're asking for more discussion, but I just want to be clear that you're presenting a more aggressive case, whereas we've been getting pushback in some ways from the Measure Y committee. Okay, Tom, and then Dave.
I just want to say, I don't know that I think it's necessary or even a good idea to have a joint committee meeting with the Measure Y committee. I think they need to consider it. They need to have the presentation. Myrna needs to express this thing to them like she's done and see what they say. Just see, maybe everybody's going to say it's wonderful.
Okay, Dave?
Yeah, I agree with Myrna. I think it's administratively unworkable to try to go to the individual project level here. It's going too far into the weeds. And so I don't think we ought to do it that way. I like what's been presented.
Okay.
So can I move that we move this forward?
How?
Well, we have a motion. Now, let me ask you this, Deborah. You've agreed to reach out to the Measure Y committee. Can we amend this motion to indicate that we recommend that it be presented to the Library Commission pursuant to your discussion with the chair of the Measure Y committee?
I'm not sure the committee is going to.
So are you moving that? Are you recommending that we bring it to the full commission on the 7th, as written here on page 83?
Well, I'm sorry, actually, I think that probably is a little premature.
I don't think we need to move that it be brought to the full committee in order to bring it to the full committee. We had some discussion about whether this should be a discussion item or a motion. I think we still have time to decide whether we want
Resolution.
to bring it to the full commission. But I do think it makes sense for you to talk to the Measure Y chair at least and
Yes,
just
absolutely.
assess. Yeah, Dave,
Absolutely.
are you raising a different point?
Well, I was prepared to make a motion, but it's not Deborah's motion. My motion would be we refer this to the Oversight Committee for its input. But that's not what's on the floor.
Right.
I don't, have we made a motion? Has somebody,
No, we don't have a motion.
No, we haven't.
We do not
Somebody
have
has
a
to make
motion.
a motion and it has to be seconded and then we can vote.
Well, we
Right.
can suggest that Myrna bring a resolution. Does the committee have to bring the resolution to the commission?
No,
Okay, why don't I talk to the chair and talk to Myrna and see if staff wants to bring the resolution forward.
I think that's the best approach. I'll rely on your good judgment in deciding the best path forward. So I think we're not going to, Jen, we're not going to move forward on this motion. So then we do have the time and date for the next meeting. Are there any new topics that you would want to add to an agenda for the February 21 meeting?
Oh, before you move on, are we wrapping this up? Because I just want to recap what I heard.
Okay, yeah, please go ahead.
Okay, so I think it was Commissioner Hauser would like an edit on the first page to quote the entire, that the quotes would include the expenditure plan. I
The
want,
full quotation, yeah.
yeah, full quotation.
Mhm.
I needed to make a revision on page 5 of the document where the summary table is. Since there's a sentence in the middle of the paragraph, it says, since the inception of Measure Y revenue increased by 26%. It should read that Measure Y approved budget has increased by 26%. So I want to make that edit, clarification.
Myrna, back on page 1, Tom was also saying that you should go back and check the original language because he thought the numbers and letters might be reversed.
Okay, numbers and letters, and I'll quote. Okay,
And also he had requested that if in fact you decide to bring this to the full commission, it has to be reworded in terms of being the policy of the commission.
okay,
There's some language in there that says staff proposes. I think that appears 2 or 3 times, and that's what David was talking about.
yes, yes, I understand.
Yeah.
Okay, so I have those items written down, and a commissioner or chair Doyle will speak with the chair of the Oversight Committee.
Yes.
And if you, so that's where it's not clear in terms, I guess I will be notified of what the next steps would be.
I'll get back to you and Ann, yes. Mhm.
Okay.
And
I
Ann?
think that's the best plan.
Yeah.
Before this is distributed, I'd like to make these edits. Is that okay? I could make these.
Sure.
edits and distribute it back to the Finance Committee. I'm not sure if that's.
Oh, sorry, Andy, I stepped in front of you.
No, please go ahead, Myrna.
Okay.
And Deborah, thanks for reaching out. We'll just wait to hear back from you as to what you feel the best course.
I'll send her a
Is-
note tonight.
Okay.
Mhm.
Barbara?
I haven't heard where my request to talk about the lease is going to show up in terms of what we're talking about here. Is that going to be part of the conversation you have, Deborah, with the chair of the Measure Y committee, or how will that be addressed?
The Rohnert Park lease?
No, the question of leases and whether 2/3 of the cost of headquarters should be paid by property tax.
Yes, I'll talk to her about that.
And since you are talking to her, I'm just remembering that we had that problem with the Measure Y report coming to us because they voted on email or however that was handled, and they had to meet again to have properly discussed. So
Yes.
I'm thinking that talking with, obviously with the chair is not going to be, a
Correct.
complete way to go for making sure the committee is included. Thank you.
Okay, anything else to add to an agenda for next meeting? Well, thanks. I know we had a lot to cover. We ran quite long, but appreciate the thorough analysis and in-depth discussion. We'll call the meeting adjourned at 5:16. Thanks, everybody.
Good night.
Thanks very much,
Thank you.
Andy.